A whole new world for the gold price and the silver price. A whole new way to look at silver and gold. Paradigm shift, that fancy term being thrown around by no other than Bloomberg. Yes, the mainstream of mainstream financial media puts out an article about gold and says we may be experiencing a paradigm shift in terms of how the world is looking at gold. And you know what that means for the silver price as well. But will we see much higher gold and silver prices in the coming months and quarters? Or, as Bloomberg suggests, there's this chance that we could see gold, for instance, drop by $200 per ounce. Let's dig into this article and see what they say. You don't distrust the fiat money system, do you? Well, that's how this Bloomberg article starts out, by stating that typically a lot of people who invest in gold, and sure, silver as well, are people who distrust the fiat money system. Of course, it wouldn't be a Bloomberg article if they didn't poke a little jab at us gold and silver enthusiasts. Then they go on to state how gold in particular typically reacts poorly when real interest rates go up. We aren't going to be fancy, but basically what that means is that when real interest rates, when the rate of interest prevalent in the market is higher than the inflation rate, that's typically very, very bad for the price of gold and silver for that matter as well. But what's happened in the last few years is that relationship has broken down. And that's where Bloomberg starts to question, are we entering a new paradigm, a new age for the silver price and gold price? Let me read this to you. It says, the unraveling of the relationship between gold and real interest rates could be a paradigm shift for the precious metal, leaving investors struggling to calculate its quote-unquote fair value in a world where the old equations don't seem to apply. It's also raising questions about if and when the old dynamic might reassert itself, or whether it already has, just from a new base. And that's the real interesting component of this article. Has gold set a new base, a new bottom from which it can grow even further? First Mining Gold is a development company advancing two of the largest gold projects in Canada. Springpole in Ontario and Duparquet, located in Quebec, each already has 5 million ounces of gold reserves, but exploration initiatives are underway at both projects to find even more gold. First Mining is well-financed, has zero debt, and owns an interest in 4 additional Canadian gold development projects. And this has all of the analysts on Wall Street scratching their collective heads. They can't figure out why gold has been so resilient. And they warn that if institutional investors start to liquidate gold, that could be the downfall from the current price. But not all of the analysts believe that to be the case. Let me read this to you. Some analysts argue that rather than breaking down entirely, gold's relationships with its key drivers has simply been reset at a higher base. That could allow it to set records if yields or the dollar drop again. That's according to Macquarie's Marcus Garvey, who sees the price rising to $2,100 an ounce next year as the U.S. economy slows. Here's a quote. There has been a level break higher in the nominal gold price, Garvey said. Once you get the financial flows as a tailwind, I think it makes a decent push higher. Next, the article points out, is this new paradigm for gold, and we're talking about silver as well, the result of central bank buying. It's confusing all the fancy analysts on Wall Street. Listen to this quote. Quote, our models told us it's $200 too expensive. That's from Marco Hast. He's a portfolio manager at Berenberg. Yet his firm continues to hold 7% of its money in gold. And he quotes again, in our view, the future looks much more attractive for gold. There's all these different fancy models, all these hedge funds and financial analysts to put together to measure gold, but none of them are working right now. If you're looking to buy gold, silver, or platinum, do yourself a favor and check out Pimbex, the online precious metals bullion dealer and sponsor of Ron's Basement. I was a happy customer before they offered to support the channel. You'll find they have the best prices, quality, and service. I think Pimbex is best, and you will too. And be sure to tell them that you're from Ron's Basement. This would make $1,900 gold and let's say $22 silver, essentially the new floor for the metals prices. And it gets very exciting if we consider the fact that if ETF inflows were to increase again, people have been pulling money out of the ETFs like the GLD and the SLV. If that were to reverse, similar to like we saw earlier in 2023 during the banking crisis, we could easily set new record highs for gold, and we know that would pull the silver price up probably close to $30 plus in no short order. It's going to be very interesting, but I think it's key for us to remember that if Bloomberg themselves is pointing out a new paradigm, a new possible environment, scenario in which gold is operating, that's nothing but good for the silver price, the platinum price as well. One thing for sure, it's going to be an interesting ride in the coming months. I'll be here for you through it all. If you enjoy being in the basement, please subscribe to the channel and go watch a live stream. I'll see you soon.